Let's start by looking at the Futuregrowth Community Property Fund, a portfolio specializing in the acquisition of new and existing shopping centres. Take me back to the origins of getting this portfolio together.
All right. So the fund started back in 1996. None of the banks at that time, we just came out of, into a new South Africa, and none of the banks wanted to lend money to property developers or companies to build these shopping centres in townships and rural areas. And I think it was mainly to do with the fact that people didn't understand the risks in these areas. And, Futuregrowth saw it as an opportunity for infrastructure development, job creation, during the construction phase and after the construction phase, and also, realized that there were much needed key services that needed to get out to these communities.
How was it that you were able to see this as being less of a risk than other organizations in the financial services sector?
So, when we look at, these areas where they're quite remote, the rural areas and some of these township areas that we invested in, if you look at, the social grant system, many of the community members used to travel 30 to 40 kilometers to go and get the grant payout. And we realized that, that would eat into their disposable income, at least 20 to 30%, and, they'd have less, in terms of purchase for, essential food and clothing. And, we realized that by bringing the centers closer, we would benefit the community. And, for us, the risk is, it's quite de-risked because 88% of our tenants are national tenants providing basic goods and services. So, the likes of ShopRite, and all the banks are there. And also your pension payout points.
Over the years that the fund has been operating, how many shopping centres have you purchased and developed?
So we've, over those years, we've purchased and developed around just over 30 shopping centres, and currently we own 18 in our portfolio.
How do you identify those shopping centres? How do you identify the areas that you would like shopping centres to be developed?
All right. So our first criteria is, where there's a lack of services to, very remote communities. And our second part is, we look at the demand for retail together with the large retailers like ShopRite, the Pick n Pays out there and the Pep and Ackermans. And we then do a feasibility assessment around the demographics of the area, whether there's enough income to support, the building of a shopping centre.
Do you actually go onto the ground, speak to people on the ground, or have you got a model that you now follow?
Yeah, so our fund is very hands-on. I'm going to just talk around the day-to-day management. So we, all the shopping centres are based in, like I said, remote areas, and often you find that, if you don't engage with the local communities, there's always issues around employment. So we engage. We have quarterly meetings with the local community leaders, sometimes chiefs in certain areas, as well as tax associations, to understand what the community's needs are in terms of either employment or social upliftment within the community.
Are you in all the provinces?
So we currently we've got shopping centres in 7 of the 9 provinces. The reason why we're not in the Northern Cape, there's already enough shopping centres out there, and we find that if we had to develop something there, we just it would cannibalize the market. And again, in the Northwest, we've been lucky not to be there, given that the mining sector has gone through a bit of a struggle. But we are looking for opportunities still out there.
I suppose tenants are now aware of the sustainability of the projects. Is it easier over time now to attract the tenants you want for those shopping centres?
Yeah, so it's an interesting thing. We look at our retail trading densities, and often you find that a lot of the retailers that operate out in these remote rural areas where there's a lack of competition, they tend to do better than in the urban areas. Some of our retailers are doing double the sales volumes in certain areas.
So do you have, as tenants, some of the major retailers?
Yes, 88% of our shopping centres, 88% of our tenants in our shopping centres are all national tenants. So, the likes of ShopRite, Pick n Pay, Boxer, Pep, Ackermans, Capitec, African Bank, all the major banks are all out there.
To what extent do you have the local SMEs who come and rent space as well?
All right. So the balance, I mean, I mentioned that about 88% of our tenants are national tenants. The balance, which is the 12%, are normally your local businesses from come from that local community. And, when those national retailers come into those centers, they actually uplift and help drive revenue for those smaller retailers.
How's the composite now performing? Let's take it as at the end of the year.
So the fund had, stagnated back in 2013. And, we realized that we had to focus on our tenants, in terms of serviceability and making sure that our turnaround times in terms of repairs and maintenance was within 48 hours. We focused strongly on our tenant mix and making sure that the areas in which we operate, we get the right tenant mix in place. And, after 18 months of hard work from 2013, we started reaping the benefits. In 2015, the fund returned a total return of 17.5%. And as it, in 2016, the 12 months ending December, we returned 24.3% for our investors.
What are your projections going forward?
So going forward, we feel that there's still strong growth in the portfolio. We looked at the recent statistics from SAPO, which is the South African Property Owners Association, and it shows us that the rent to sales ratios, or the cost of occupancy for tenants in our types of shopping centers is still relatively low, which means that it gives us the ability to increase rentals quite a bit. And we're seeing that not only from a statistical point of view from the market, but we're seeing it directly on our properties as well.
Are you looking to develop more shopping centers in 2017?
So we've identified, there's three routes we're taking. The first step is, we've identified some shopping centers that again, aren't properly run. They've got a high rate of vacancies because we believe the current owners don't understand the market and the tenant mix. And then the second avenue is, we've owned some of these shopping centers for more than 10 years, and we find that some of these communities have, doubled in size and population. So, there's an opportunity to in some instances, double the size of shopping centers. We've identified two of our shopping centers for that. And then the third one is to partner with property developers where we've identified, a growth in communities where nothing exists currently.
Let's talk a bit about the social impact of this project, of this fund. You've spoken about the upliftment of people's lives. You are bringing the shopping to them, the retail opportunities to them. But I would imagine that it's got a wider impact. There's a domino effect and it stimulates growth in other sectors. Tell me a little bit more about that.
All right. So we, for us, the community is integral to the success of the shopping center. So since the shopping center, we did a survey recently that 80% of the employment within the shopping center comes from, the direct local community in which that shopping center operates. And obviously that has economic benefits in that people are earning a salary and, contributing back into the community. And then what we're seeing is that there's opportunities for us to use the local labor force to do, for example, repairs and maintenance on the sites. Because we find that, there's a complaint from a lot of the centers where the local community was in uproar that you're bringing all of these contractors from outside of our region, and we can do the job as well. So we've now started using more and more local labor to drive the developments.
You're also a catalyst for developing transport infrastructure, aren't you? Taxi ranks will mushroom around your shopping centers.
That's correct, and then that's why our relationship with the taxi associations is quite integral. Each of our center managers has a weekly meeting with the taxi associations on site to make sure that that they've been serviced and they're happy with the condition of where they operate from. We also have one shopping center where in KZN called Bridge City in KwaMashu, and there we've partnered with PRASA where the railway actually stops underneath the shopping center, and that's uplifted the community in many ways. It's actually reduced the cost of transport significantly for the people of KwaMashu, because they used to take the taxi and used to cost them about 20 Rand a day. Now the rail costs them about 4 or 5 Rand a day.
Are other businesses springing up around your shopping centres? Petrol stations, for example, maybe other shopping centres?
Yeah, so I mean, for example, Bridge was a great catalyst for development around us. We've seen, subsequent to the shopping centre development, there's been a regional magistrates court built just across the road. There's a 100-bed clinic right next to us now. It's a stone throw away. And we're seeing the development of a 400-bed provincial hospital being developed, which is probably going to be completed at the end of 2019. So, and we're seeing more and more offices also popping up behind our building. So, yes, it's really driving, stimulus in a region where nothing existed previously.
What about developing municipal infrastructure? Do you give that a boost?
Yes. So, I mean, when the shopping center comes online, we normally pay rates on the property value, and that contributes to the municipality, the municipality's budget to upkeep and improve services around the region. What we also do is we try and engage with local municipalities of how the fund can itself contribute to help assist the municipality to develop infrastructure. Because in certain areas, like in the Mpumalanga region, there might not be sewage or appropriate sewage lines in place, and we often have to work in partnership with the municipalities. I think we're quite distinct in the market. We're probably the only purely retail-focused fund that focuses on shopping centers in townships and rural areas. There aren't, if you had to go to the JSE these days, most of your property companies on the JSE are very diversified. So they don't only own retail, they own offices and industrial. And if you look at the listed property sector now, 40% of the earnings of these companies is coming from offshore property investments. So, there's a lot of more currency risk in that listed property market than previously, there was. And we feel that, if our investors are safeguarded against those types of, risk-taking, because it focuses on, developing SA.
I suppose your investors realize now, because of the longevity of the fund, the risk is greatly reduced.
No, definitely. I think for us, the relationship with, these types of properties need to be micromanaged on a ground level. And I think, managing a shopping center, for example, in the urban areas, like a Sandton City or Cavendish Square, is not as complicated as an asset in a township or rural area, because you've got the social and the social and environmental aspects that you have to really